Hello everyone, my name is Daniel and today I want to walk you through another analysis of mine, this time on Skyworks Solutions. So let's get to it. I'll discuss the business, historical data from the last couple of years, from 2016 onwards, valuation and a summary of all that is in here. So let's get to it. What does Skyworks actually do? Skyworks is a well-known company in the semiconductors sector. And I've seen a lot of people talk about them, especially as the stock exploded over the last couple of years. And now, with the overall tech sell-off, the stock also has come down. And I decided to take a deeper look into what they actually do and if it's actually worth what it's trading at, perhaps more, perhaps less. But we'll get to that later. What are they? What do they actually do? They make amplifiers, tuners, converters, among all other kinds of semiconductor-related hardware, and they manufacture this themselves partially. They have integrated up most of their core production, but not the full supply chain. So it's not a fully vertically integrated company, but they have a decent amount integrated. From design to some parts of manufacturing. And the semiconductors they make are used in radio frequency and mobile communication systems. So what should I think with this? Well, EV cars and home devices, but also your smartwatches, the radio parts of walkie-talkies or other things, also machinery, essentially in almost everything that has some tech related aspects, you can find some of these semiconductors, but business-wise, mostly in smartphones and more specifically iPhones. Because Apple, their largest customer, makes up about more than half actually of their revenue. And most of that is smart with Apple Watches, iPads, and smart iPhones. And specifically the iPhone, that's a very large part of Apple as well, but at least of their hardware segment. But also for Skyworks. Skyworks is very dependent on Apple. They also have some other big customers like Amazon, Bose for the speaker system, Cisco, Ericsson, Foxconn, and a whole bunch more. This is just an alphabetical list here of their largest customers. But Apple is by far the biggest. Samsung also is close to 10% stake of total revenue, although just shy of it. They mentioned in their last earnings report, or in the earnings call more specifically. But this is something to note that Skyworks makes most of their money from Apple, and that's something to keep in mind for later. And 11% of their revenue, at least in the fiscal year 2021, was related to China. So that's also something to keep in mind. So the smartphones, be it iPhones or from Samsung or any other players in the market, that is the most important part for Skyworks. So to understand how the business is performing, I looked up an interesting graph from IDC, making some predictions about the smartphone market. Because the last couple of years, a lot of people have been getting smartphones and iPhones. Apple has seen that. Skyworks has also seen that with revenue really picking up. But you don't invest just for the past, also for the future. So I looked at this interesting chart here with some predictions for specific types of smartphones. And in essence, this is also some kind of a prediction for Skyworks, as this is the end market for their products. In the end, most of these chips they make will end up in smartphones. So it's essentially their revenue is dependent on the smartphone sales and also the prices. What kind of chips if prices really drop, manufacturers might want to put in cheaper chips, and if prices really pick up, they might want to pay a little extra for better chips. So this is the prediction that the next couple of years. So the revenue, the overall market will still grow, but last couple of years we're a bit flatlining, but growth should be picking up again. But we'll have to see. If I personally think with all the current things going on that you could move this graph a bit to the right and still believe that there's some growth, although 1.9% cumulative aggregate growth is not, or annual aggregate growth rate shouldn't be too exciting, but I think it will be slightly lower than that personally. But Skyworks is set to benefit from that growth, even though Apple and Samsung have been cutting back recently. So that's why I said I would expect this to flatten out a little in the beginning and maybe pick back up later. But we'll have to see. And selling price is also expected to decline, at least in the medium term. So for 5G, which already has been declining actually. So we'll have to see how that impacts Skyworks and other manufacturers of semiconductors for in phones. So to continue on the business part of Skyworks, what do they actually do? Where are they? And where are they located? That's what we're getting to now. So this was an initial surprise for me. I didn't know that Skyworks was mostly they had a fairly large part of their physical assets in Japan and Mexico. I thought it was more United States, but this table was a surprise for me. But it's very interesting to know where they are located, at least their physical locations. This is taken from the 2021 annual report, which ends in October 2020, so not in December 31st. But it's interesting to note that, indeed, they are located mostly in Japan, Mexico, and Singapore, and they have some residual assets in the US and the rest of the world. And these are most likely just offices, not any manufacturing facilities or any equipment. And this has not changed that much over the last years. Everything has expanded, except for the reverse of the world part, and that has stayed very similar. But that's interesting to note. And to wrap up some parts of the more boring part of the business, more theoretical, for more data part of the business, their shareholders, this just looks normal. We see a lot of big institutions, BlackRock, Vanguard, and all the other major asset allocators. And that is not surprising for a company this size. It's in the S&P 500. It's one of the smaller companies in the semiconductors industry, at least according to S&P, but it is in the S&P 500. And there's nothing special here, to be honest. General public, so retail investors like us or institutions own most of the shares. And who is actually heading this company? This was fun to look at because I always like actually trying to find interviews or how management, what perception do they give you and or impression. And I looked at in particular these three people within the management of Skyworks. Liam K. Griffin, that is the current CEO, Chris Senisel, that's the CFO, and Reza Kasnavi, that's the Senior Vice President of Technology and Manufacturing. These, in my opinion, are the three most important people in the company, but you could disagree on that. Nonetheless, I took a look at these three people. K. Griffin, I watched a CNBC interview of him and also listened to or read through the earnings call from the most recent quarter, in which he, in great detail, explained how a large acquisition of theirs was going. So he seemed to know what's going on. He wasn't saying anything too exciting during the earnings call. He is overshadowing a bit how large of Apple is of a customer of theirs, and what the impact on their business this could have, especially now that Apple's scaling back orders. Samsung as well, he was asked about that, and yeah, aside from saying that he expected them to one of their key partners going forward, didn't really give any specifics on their partnership with Apple or Samsung for that matter. And he is talking a lot about the valuation of the stock for the CEO. So that is also something I found interesting. Chris seems to know what he's doing. He answered all the questions in great detail. He seems to know what's going on. I don't really have anything to specifically say about him. But Reza Kasnavi, he didn't speak at any of the earnings calls, at least the ones I watched or read through. But as head of technology and manufacturing, I found that he was one of the key people in trying to gauge how innovation at Skyworks should go or would go and continue in the future. And yeah, he is a very educated man. He has a PhD. He has of course, his bachelor's and master's. He really seems to know what's going on. He has been working for Skyworks for more than 10 years now. The legal 14 years, if I remember correctly, by now. And I think he is fit for the job. He seems to be heading the company in the right direction together with the rest of management. Kay Griffin, that would be my primary concern in management, as he seems to overshadow the problems of their concentration risk. They did acquire INA 2 years ago, or 1 year ago, not too long ago. We can see that back in the revenue jump. And that was supposed to drive diversification, but in customer base, but hasn't really. And the idea of the acquisition was to really scale up certain divisions, but they're working on that. We'll have to see how that turns out. But Liam K. Griffin seems to be a bit more of a talker than a doer, so we'll have to see. At least that's my impression. So let's get to what they actually accomplished. Liam K. Griffin hasn't been in management for too long, so he hasn't been CEO for this entire time period. So here I pulled up a bit of data. I pulled everything up from 2015 to 2021 historical data. Keep in mind, these are fiscal years, so not calendar years. 2021 here meets October 1st, 2020. So keep that in mind. That's something important. They have a broken book here, which makes things slightly confusing, but in the end it doesn't really change anything, except for having the numbers in the nice columns. And here we can see when their acquisition happened in 2021, and the revenue jumped, net income jumped, but as you can see, before that, net income was essentially flat from 2015 to 2020. Nothing really changed, although if we exclude 2020, you can even say that it wasn't going in the right direction before 2020, as 2019 also was a bad year for semiconductors in that regard. But as these companies are slightly more cyclical, that's not too unsurprising. What is interesting is to see the growth from 2015 to 2018, and then the cycle started to turn against them. So this is a cyclical company. With new acquisition, I do not expect that to change one bit. The numbers just will be bigger. We can also see that they're generating a lot of cash flow, although net income consistently is lower than free cash flow, which are not in all years, but in a lot of years it's significantly lower, and in some years it's slightly higher, which is something to note, as we can see that a lot of depreciation most likely is just deferred, which we do see in the capex, which has been increasing slightly, but relatively steady, while cash flow, at least operational cash flow, has increased. EBITDA also has been doing fine. Comparing it to operational cash flow here, we see that both are going in the right direction. So that's the historical data. So let's move on to some nice numbers. The margins, like the EBITDA, here I don't have the margins on here, but I'll show them later. Margins for Skyworks have been great. EBITDA margins has been very nice, 39%. That indicates some operational quality of the company. Net margin of 26%. This shows, essentially these two numbers show that the competitors of theirs are not keeping up with them, and really and that customers are not easy, do not have easy access to different types of chips in that regard. They're deploying capital very well, return on equity of 27%, return of total capital 15%. Those are decent numbers for within the semiconductor industry, at least for a more stable company like Skyworks. So let's get into the valuation before I talk on for too long here. So I made some estimates myself. I also made took some analyst estimates from Refinitiv Icon. I'll quickly guide you through them in the sheet themselves. So let's get to it. So this is my beautiful DCF sheet. Here's all the numbers I pulled up, and some more margins, some comparisons to net income EBITDA, for example, or other things, other interesting numbers to see if that's any consistency. In my own estimates, I assumed slight downturn in 2022 and recovery period in the years ahead, slightly ahead of the 2% annual growth rate, because I do expect there to, as they have such a strong position in the market, I expect their revenue to grow faster than the overall smartphone market, especially if they manage to scale up the acquired business sufficiently. And as far as I could tell, that has been the acquisition overall has been going great. So that could another acquisition wouldn't be out of the cards in these couple of years. Do expect CapEx to go up slowly. That might not fully be the case, as we have seen them being able to be very disciplined with their CapEx, but I would expect it to remain around these levels. Free cash flow, I would expect that to also slowly increase, similar to net profits. Although I do keep in mind that I expect free cash flow to continuously be lower than net profits. So I did my discounted cash flow in this case on free cash flow. That leaves us with an R discount rate of around 10%. In the slides, I put a different number because the price is different now. This is live or delayed by 20 minutes. Analysts actually expect something entirely different. They expect way higher free cash flow, way higher profits. They're very optimistic on the company. Honestly, I would expect downgrades in their expectations, as they tend to do when things start turning against the company. I certainly start seeing a lot of downgrades, a lot of revenue forecasts being downgraded. I expect that to happen to Skyworks as well. So the analysts, if you keep those numbers, you almost end up in an internal rate of return around 17% annually, which would be amazing. Personally, I get it closer to 9%. So take whatever number you like more, but I personally think it will be around the 9% mark in that case, as Apple and Samsung scaling down orders. This isn't even taking into account a total loss of Apple as a customer. That's always a risk that's going to be counted, that they're going to be discounted on, a concentration risk. But that's up to management to change that. So let's continue. They also have some competition. I won't go into too much details regarding their competition, but our peers, Cognizant, Qualcomm, NXP, Semiconductors, Broadcom, those are a couple of the big ones, or at least the interesting ones I found. I took a quick look at. Cognizant has lower growth and rich valuation. They have higher price earnings, higher price free cash flow. I didn't really see anything too interesting with them. At least their forecasted growth in the short term has already been quite low, at least by analysts. Looking at end of cycle, semiconductor cycle, at least market that would lower growth could be potentially even lower or negative. Qualcomm is higher levered than Skyworks. And for this leverage number, I took equity minus equity and debt, net debt divided by equity minus all goodwill. So I took out all the bullshit numbers like goodwill and the net debt, and then you get for the net debt I used for this formula in this case. So this is not normal debt to equity, but this is net debt to adjusted equity, adjusted for goodwill, which I fully subtracted, fully set to 0 on their balance sheet. So then you get to 1.7, 1.8 number for Skyworks. I have it in another slide, which I will show soon. NXP also has a higher valuation than Skyworks, at least at the time of making this presentation. And I have a lower net margin as well, so I did not really see anything too interesting there. Broadcom, disclaimer, which I do own, has higher growth, expected growth than Skyworks, slightly higher valuation as well. Forward PE wise, Broadcom is slightly more expensive, at least if you just look at 1 year. If you look at multiple years, I found that they look very promising. And there's also a couple other semiconductor plays in the industry that might be interesting, but I will not go into depth on all semiconductors in one go. I think each of them deserve their own analysis, but that would take time. So let's see what we got here for Skyworks. So we got high margins, both net and EBITDA. We got relatively attractive earnings multiples, be it enterprise value EBITDA or price earnings, at least expected. This is based on analysts, so take that with a grain of salt. My internal rate of return calculation from my own and analysts is around 9.4 for my own and 17 from analysts. If it would be in between there, that would be amazing. If it will be on the lower end of this expectation, that also would still be very attractive return-wise. The net debt to equity minus goodwill is relatively low, although relatively low. Normally would search for a number under 0.6, but I subtract goodwill from the equity side, which for Skyworks is a decent amount. So in that case, I would say, yeah, they are relatively leveraged. They recently did a big acquisition, which levered them. Before that, they were barely leveraged. So I do not see any problems with that as long as they don't do any big acquisitions anytime soon. The return numbers, this is indication of management allocating capital very well. 15% return on total capital and 28% return on equity. Return of assets on 30%. Those are all double-digit numbers. That is what you should expect in the semiconductor sector. This is amazing. These are good numbers. So I do find the company interesting, although concentration risk and valuation is something to keep in mind. With my own estimates, it's not that cheaply priced Skyworks, at least taking into account the risk that valuation that Apple leaves them, or Samsung scales down, or anything else down cycle semiconductors. So it is attractive, although not super dirt cheap, as you might think with a P of 8 on a company that was growing double digits. Here's some sources. I looked at the annual reports. These are the tools I used. You can look through this yourself, and I'm heading out. If you enjoyed the video, please give a like. Especially let me know if you have any comments or any insights on Skyworks. I would also always love to know. And see you in the next video.